All right, we'll call the meeting to order at 1:01. And the town of Smoky Lake respectfully acknowledges that we are situated on Treaty 6 territory, the traditional lands of First Nations and Métis people. And we'll move to the adoption of consent agenda. Terry?
Oh,
Consent, so we go around.
first.
yeah.
So, sorry.
So items that you want to remove,
Yeah, right.
so the ones you want to discuss, you want to remove.
7.1 and 7.3 are the only two on my that I like to discuss. And then we can move it to you. So then you, unless you want to move it over.
Yeah, go ahead,
Evelyn?
8.1.
Mel?
7.4 and 11.1.
Marianne?
Okay, thanks.
And Terry, do you have any others you'd like to? Yes.
So then if we don't do like 6, 1, 2, and 3, they won't come up with.
No, the motion that's recommended in the agenda is passed with the adoption of the agenda. So if you want to discuss any of them, you should remove them.
Yeah. Hold on, yeah.
1, 2, and 6, 1, 2, 3. And then Penny Farms delegation. Right.
Isn't that, I thought we discussed that has to, that can't be part of the, was that not what you brought up with the last meeting that we had? Is that delegations, these are exempt from the, yeah.
No. They can, because if you're just accepting what they present as information, then, but normally you probably want to, in case something else comes up during the delegation, I would recommend you probably remove delegations. So what if she says something that sparks a different debate or something? So I would recommend you remove them.
And we don't have to in 4.1 or 4.2.
Well, they're gonna happen.
Those
Those are the actual.
those aren't, those delegations you can't remove. But the
Okay,
reports
that's what-
on them,
that's
you
what-
technically could, but you probably don't want to. You probably want to remove them. It's for good.
Remove as in bring them in.
Remove as in discuss.
They're already removed.
For 1 and
Yes.
2, yes.
Yes.
And closed session as well. I think we,
Yeah.
Right.
Closed session, if we can.
Yeah.
There's no. Okay, well then, if we can adopt the agenda, consent agenda, right? I always struggle with how we say this, and then, oh, Terry?
I was just
you're
gonna-
okay. So adopt the consent agenda, removing, is that how I put it, Don? 7.1,
whichever way you do it, we'll make it work.
okay, removing 7.1, 7.2, 7.3, 8.1. Sorry, guys, can I read that, go back? 6.1, 6.2, 6.3, 7.1, 7.2, 7.3, 7.4, 8.1, and 11.1.
And 14.
Right, and 14. Okay. Terry, you make that motion?
Yeah, I'll go. Consent agenda.
All in favor? None opposed, so carried, and then we will move on to the adoption of, never mind. We will move on to delegations.
I'm not sure if she's on. Laura, are you online? Oh, guest. She's supposed to be here, so I wondered if the guest was. I guess we'll, if it's okay, we'll continue through the agenda until she
Okay,
arrives.
she'll know to.
Send her a message.
Okay, so we'll move to 6.1. Terry, you want to have any questions? Administrative reports?
Not yet.
No.
Doesn't she present then if it's in?
It's just.
Oh. Not necessarily. We just kind of have to. There she is.
Saved by the.
Hi, Laura.
You're muted, Laura.
All right, how about now?
Now you're good.
All right, thank you. How's everybody?
Good.
Would you just like me to get started, or I wasn't sure?
Yes, yeah, no, if you're ready, we're ready for your presentation.
Okay, sounds good. Let me just share my screen here and everybody can follow along.
Did you want to move?
All right.
You want to move the chair to the side so you can see?
Can everybody see my,
Yeah, we can see your screen.
okay, excellent. All right, I'll get started then.
Don is the chairman.
Here, sit back here.
Here. Oh. Okay, no, go ahead, yeah. Okay.
Sorry, okay. So these are the consolidated financial statements for the town of Smoky Lake, and these are stamped draft as they haven't been approved yet. So once these are approved by council, then we can remove the draft stamp and these can be finalized. So if anything comes up, we can still make changes during the meeting. If anything, council, just let me know if anything needs to be changed. Second statement is the table of contents. Moving on to the first of the two reports. So first one is manager's responsibility for financial reporting. So this report acknowledges that management has a role in these financial statements. And basically this means that management maintains accounting, budget, and other controls to provide reasonable assurance that transactions are appropriately authorized and that assets are properly accounted for and safeguarded. So this is the first of the reports, and this would be signed off by Don, the CAO, on the same date as the audit report, which is today. Second report is the auditor's report. This would be our audit here. So just a few things. Just to usually take this time when I sort of explain how the audit went. So yeah, things went really good this year. Every year we give some suggestions for improvement, and it's good to see that management implements them. So we do see a general increase in some of the controls in that. So that's what we've been auditors, a steady, really good improvement in some of the little internal controls. So that's good. And everything is done electronically, so we can do our audit from the office, and everything is uploaded to Microsoft Teams. When we audit, it means we take samples and we ask for documents to substantiate balances. So management does a really good job with that. Whatever we ask for, we're able to substantiate. So overall, no other comments except really good job overall by management and maintaining good accounting records and backup for all those accounting records. These statements are in accordance with Canadian Public Accounting Standards. That's called PSAS. And they're the same standards that all municipalities across Canada follow. So you'll be able to pick up these statements and compare them apples to apples across, even the city of Toronto, you'd be able to compare them. It is a clean audit opinion, so that's right in here. And that says that the accompanying consolidated financial statements present fairly in all material respects. So that's our report. And then we sign it off on the second page, which would be dated today. And then we put our signature right here. Any questions on any of the reports?
Nope, doesn't appear to be any questions on the reports.
Okay, I'll keep going. All right, so this is the first of the two statements that have the most information. So I'll spend a little bit more time on those as there's a lot of really good information on them. The first one is the consolidated statement of financial position. So this goes over all the assets and liabilities of the municipality. And it's as of December 31st, 2023, which is this column. And the second column is just the comparative statements, which are, of course, audited both years. So first two lines are cash and temporary investments and restricted cash. So a slight increase from last year. And you can see most of that, some of that is restricted cash. Restricted cash is related to grant grant money that's been received but hasn't been spent yet. So out of the bank account, part of that, 45,000 is related to grant money, and that can only be spent by grant agreement. So that's why we call it restricted cash, just to identify that part of the money in the bank can't be spent except for agreements from third parties. So it is restricted in that manner. Next line, property taxes and grants in place of taxes. You can see it's got a slight decrease, and this year there was a little bit better collection on taxes. When we get to note 5, you'll see a breakdown of there between current and arrears. Grants and receivable from other taxes, you can see a really large increase this year. When we get to note 6, you'll see a breakdown, but just to give you a bit of a sort of a preview before we get to that note, most of the increase this year was for the water facility grant that was promised by the province to facilitate that large project that'll be taken on in the next few years. So that's related to that. So that's included in receivables, and of course, as it comes in, it'll reduce the receivable, and of course, there's a related deferred revenue to that. So of course, you're not able to bring it into revenue until that project is worked on and completed, or portions are completed. Trade and other receivables, you can see this is a big part of this is the utilities, and there is quite a large decrease this year, and that's just because in December it was a warm month compared to last year, so most of that gas utility would be a lot lesser. So if you can remember, we didn't even have snow this year in December, so compared to last year when it was a colder December, so that means there was less gas utilized in that month. So then the receivables would go down, which would be the bills that would go out in January and get paid in January. Notes receivable, no changes just this year. So these would be amounts that are owed to the municipality, like the debt charges recoverable, and another note receivable from the MCC Smoky Lake development. So there was no new notes this year, just repayments on some of them. When we get to note 7, we'll see that a bit more details in that. Last line, the investment in the MCC for Smoky Lake Development Corp. No change there. This is just the initial share investment that happened last year on that. So no change there. And we'll see breakdown of that in note 3. So total assets, so current financial assets, 7.253 million. Of course, the big increase of that is mostly due to that one grant in grants receivable would be a large increase. Moving on to liabilities. So accounts payable are things that would be owing at the end of December, aren't paid out January 1st, January, February, March. So that's what accounts payable is. And you can see there's an increase this year. Most of the increase is just there was additional funds given for the school, the Vasquez Valley, the school, and it's the 200 and some thousand for the daycare grant, which there's a debenture that was set up for that as well under long-term debt, and that's the associated money that's due to the school at the end of the year, and that was paid out in early 2024. Deferred income, of course, that's mostly the deferred grants and some other things. You will see that when we get to note 9, as I mentioned, that's that 3 million plus grant money that's for the project upgrade that'll be done in the next few years. Long-term debt, note 11, and you can see there's an increase this year again. As I mentioned, it's the Aspen View School grant related to the daycare at the school. That's 240,000, and so that was taken on this year as a debenture to be paid off over a number of years, and that's the new addition. All other long-term debts were slowly being paid off. So when we get to note 11, we'll see details on that. Contaminated sites liability, so that's just additional, it's reduced. There was additional costs to remediate part of the sites this year, and that's the reduction. And then we have the new put in this year, the asset retirement obligations. This just identifies the liability associated with the asbestos in the buildings. That's just an estimate. So it's not anything that needs to be taken care of, but is a new standard that accounts for these things that potentially, if these buildings were being demolished, you'd have to take care of that. It doesn't mean it's not anything due right now. It is an estimate. And so that's just a new standard that has that. Some of the municipalities, like if you've got gravel pits, we've seen them do that. So again, if of course the town doesn't have that, but if you had a gravel pit at the end of its life, you have to remediate the land. And so that just identifies costs, just to give you a bit of an idea of what that is. So at the end of an asset's life, whatever the costs are to remediate would be that asset retirement obligation. Again, this is a new standard in public sector accounting standards that was accounted for this year. Liabilities would be the total financial assets at the top, the 7.253 million, less the liabilities of 5.710 million. Then we come to the net financial assets number of 1.542 million. So I'd like to pause and just talk a little bit about this line. This is sort of a key financial indicator that would let you know, sort of the operational health of the municipality. So first you want to make sure that at least it's above zero. So that's good. So first it passes that one in. Is there enough in operational funds sort of to function for the coming next few months? So I would say yes, there is enough net operational assets in here to operate the next few months. So I think even though you see a slight decrease, I don't think it's anything to be concerned about. You're still in really good operational health. If we started to get close to maybe 50, 100,000, close, then I'd be saying we might have some concerns there, but there is quite a bit left in here to operate for the next few months after December. Moving on to the non-financial assets, there's inventory for consumption. So what that is that's the public works inventory. So that gets counted at the end of the year. And that's that number. There's land for resale. That would be the land lots that the municipality has for sale, just land. So when it's up for sale, it moves to land for resale. So that just lets you know the value there, including legal costs and things associated. A little bit of prepaid expenses. There's an increase this year. There's usually that's things like prepaid expenses, like some contracts, as well as could be some prepaid insurance. So these are things that are expenses related to 2024, and they're just paid ahead of time. This year there was an additional prepaid deposit for some equipment for about 15,000. That's what we see sort of most of the increase there. Tangible capital assets. So this would be the cost less or plus additions, less any disposals and less amortization. So that would be breakdown there. You can see there's a net increase, which means there's more additions than amortization in that during the year. When we get to Schedule 6, there's a really nice breakdown. So I'll go through all the changes this year once we get to Schedule 6 there. So total non-financial assets, 9.216 million. That gets added into the 1.542 million. And that comes to the final number of 10,759,000. A little bit less than last year, but fairly comparable to this for the accumulated surplus for both years. And you're going to see this number come up on multiple statements. Just keep an eye on this number that we do reconcile quite a few times through the statements. Any questions on this statement?
No questions.
Okay. Let's move on to the consolidated statement of operations and accumulated surplus. So this goes over all the income and expenses for the year 2023. And then we also have the budget column, which is unaudited, but it is good for informational purposes for 2023. And of course, we have the final column, which is the comparative year for 2022. So we'll just go over a little bit on where we see significant changes on the revenue side. So everything else is fairly close to budget, which is good. That means that council's doing a really good job of budgeting. One area here where you're going to see the large decrease is gas. And as I mentioned, we had a warmer winter overall. So that meant that there was less gas usage this year compared to 2022. So 767. But I don't think it's anything to be concerned about. If we move along to the associated expenses under gas service, the 614, it's about and I did do the calculation here. Where did I write that? About 100 some. Yeah, there's about 100 some thousand. I didn't quite write that down, but there is about 100,000+ surplus there. So then that means that the gas is profitable. I think you'd only be concerned if you saw basically the cost being more than the revenues there. So overall, I think it's fine because the costs did decrease accordingly as well. As you can see in here, the costs are less as well. The other revenues, solar, that one, you'll see the revenue 31,383. It does look like it's higher, but it's also together. What happened is there's also 200,000 that's for the grant that went out for the Métis Solar Crossing. So that's included in grants tranches for operating, but that's related to the solar. And that's right in here with the expenses of solar. So once you take out the 200,000, which has already received a grant, it's about break even, I would say. A little bit of a small loss, but overall break even the solar. So that's good to keep an eye on that, just to make sure that it's not going into a loss position. Grants, government grants for operating, as I mentioned, the large amount, the Solar Métis grant, which went out automatically under the solar function, 200,000. And of course, last year there was about 3.5 million. That's why it's so large last year. And of course, that went out as well under here. 3.5 went out in the prior year, and that was just into the town and out to the Solar Métis Crossing. Of course, you expected to get some, according to the plan, we're gonna see that later on in one of the notes, that there should be some returns on that hopefully in 2024, some repayments from project there. Investment income, of course, there's been an increase in rates, so that's why we'll see the associated increase. So that makes sense. And that's, again, hard to budget for. That's something that, and even now, it would be hard to tell if interest rates are going to stay the same or go down next year. Nobody knows what the Bank of Canada is going to do there. The other ones, I think, look fairly comparable. Just to let you know, the land sales were included in the other item, the ones related to the lot sales, a little bit of extra revenue in there, and that would be under the other item in there. That's the 31,000 in there. There were some of that land was sold during the year, and that went through here. So total revenues, 4.112 million, fairly close, a little bit higher than budget, but overall fairly comparable. And you can see last year there is a decrease, and that's just mostly due to that solar grant that was received in there. That's a little bit just a one-off. I don't think you'll see that kind of money come in under that project, but who knows in the future. Moving on to expenses. Expenses are by objects, or sorry, by function. And function means it lets you know what the services are costing you. So that's how they're grouped together. Later on, we're going to see them by object. It's a breakdown down in a different way in another schedule, but by function, this lets you know what the services are costing you. Again, really, really good budgeting and fairly close to what was expected. And again, we'll see the decrease. Most of that would be, you can see in here, as I mentioned, the gas service is just because we had some warmer months. So the revenue went down, but then the associated costs went down as well. As I talked already about the solar, that's the extra 200,000 in that grant money that went out. And then the other one where we're going to see where there's a bit of variance here is under recreation and culture. That's where the $240,000 associated grant that went out to the Aspen View School for the daycare went out. So probably that wasn't a budgeted or thought about during this year, but that's where you're going to see the increase, is that 240,000 in here. Otherwise, if we were to take that out, it's fairly close to budget. That's really the only extra unusual item there. So overall expenses, 4.526 million. We subtract that off of the revenue, the 4.112, and then we come to a deficit from operations. So just to let you know, this also includes amortization, which is a non-cash item, and that's just the estimated write-down of the assets. So if we were just to add that back, and the amortization is 460,000. So if we're just to give you sort of on a cash perspective how things look, you'd be actually showing an operating surplus of about 45,736. So same thing happened last year. But again, we mentioned that it is the amortization. For public sector accounting standards, we still have to account for it in there, even though it is a non-cash item, but we do have to include that in there. Other items, we've got government transfers for capital. And again, for a bunch of the capital projects, the grants were being utilized as much as possible. So that comes into this item, and that reduces that deficit from operations to final annual deficit of 126,933. Again, if we add back the amortization, that actually is a surplus of 330,067. Adding that amount in to the accumulated surplus beginning number, and then we come to the end numbers. I mentioned we're going to see this a few times in the statements, the 10.759 million at the end of the year. Any questions on this statement?
No questions.
Okay. All right. Moving on to the other notes, this is the change in net financial assets. I already mentioned that was that key financial indicator. So it is just a reconciliation required. Cash flow statement. Again, this goes over all the components of cash and things. And then overall, it just reconciles to the ending cash number. Moving on to some schedules. These have a little bit more information, I think. Schedule 1 goes over the municipal taxes and how it's broken down. So first we've got the taxation amounts that are collected from residents, the 1.407 million. And then we see the straight reduction in requisitions, the Alberta School Foundation and Seniors Housing Foundation. So all municipalities in Alberta are required to collect those on behalf of the province. So these get collected and get sent directly to the government. So that's a reduction of 335,659, and that leaves the municipality with 1.071 million at the end of the year. government transfers for government transfers. This totals them up, so that's both the operating and capital, so 907,000. And as I said, overall, the municipality does a really good job of applying for grants as needed to cover projects, as well as some of the other projects, like you say, the Métis Solar project. That's really good to see, and that the town is facilitating these types of projects and able to get government grant funding for these things. This is the other one, Schedule 3. This one goes over by object. As I said, this is another way to look at expenses. Anybody from a business background would recognize these numbers more than we would see on a by function. So you can see what the actual costs are by object in here. And you can see in here exactly the amortization number, which is clearly broken down on this line. You can see it. And you can see the other amounts. You want to know the interest on your long-term debt. You can see what that's costing you right now. It's actually broken up into the separate functions. And you can see the transfers for boards, and this is where we include the 200,000 for the main, both the Métis crossing, as well as the 200,000 that went out to the 240,000 to the Aspen View School. That's included in the 538. And of course, last year was quite large, as that was the 3.5 million that went out to the Métis crossing in 2022. I think the other ones are, fairly close to budget, a little bit of variance, but overall fairly close there. Moving on to the changes in accumulated surplus. So this goes over all your reserves, which is just another breakdown of your accumulated surplus. As I mentioned, you see this breakdown in a few lines. I'll just center it here so it's on the full page. Okay, so of course we have the opening numbers from last year, and then we see all the changes that have gone through the unrestricted, and we can see in here the first column is unrestricted. So we see in here the change in here, which is the funds used for tangible capital assets, 726, the amortization, which obviously these items affect equity and tangible capital assets, some repayment on debt. And then of course the net reserve transfers. There were 2 motions during the year by council to utilize the CN, the CN station reserve, as well as the natural gas system. So those would be the reserves in there. Moving on to last one would be the schedule of the segmented disclosure. So these are all the same numbers that we've seen previously, except the top row is by function, and then the left-hand column is by object. So these are all the same numbers on the other statements. And this one, it's quite large, so it goes on to 2 pages, and that would be the final surplus there, the 126,000 number right there. Schedule 6, this was the one that I mentioned, has a lot of good details about tangible capital assets. I wrote some notes just to let you know what all the various changes during the year were. So under land, there was a house purchase for the doctor, and that's the land portion related. That'd be the only addition to land during the year. Buildings, there were, of course, the doctor's house addition, the actual physical building part is there, as well as there were some general improvements to the town office, public works building, and fire storage buildings. So those amounts are all added in onto the building category. Machinery and equipment. So there we see there were some gas meters and computer equipment, a mower, tiller, and snow blower for the year purchased under machinery and equipment. So quite a bit in there. Engineering structures. So this was the new sewer system related. That was work done on 54th Ave. And same thing under roadway, some paving and things and work done on 54th Ave, as well as the catch basin work. And then underwater as well is, again, that water portion of the work done on 54th Ave. And then under solar, of course, there were the EV chargers. That's a 13,000 there. So overall additions, 726,000. Under transfers and things, this would be there was some work in progress at the end of the year. So work being done both on water and on sewer, and those projects were completed. That's what happens. They go to assets under construction. And as these projects were completed, they were of course completed in 2023. We can see that assets under construction. There was nothing at the end of 2023, but there was some projects that were still on the go at the end of 2022. So those would be the disposal impairments and transfers, just transfers this year. So overall cost on tangible capital assets, 22,909,000. And then the accumulated amortization, this would be the estimated write-down of the assets. So these would be, for example, if you've got, you buy some equipment, just to give you an example, that it's $10,000, and you say it's gonna, you know, it'll last for 10 years, then you write it off, it would be 1,000 per year. And at the end of the year, that accumulated amortization would be minus 10,000, and that would be that the asset is fully depreciated. So that's what that means. These are just estimates again, no one can foretell. I guess this is a good time to talk about this. I did have one recommendation, just speaking with Crystal on things, and we did note that the last time that the tangible capital asset policy was looked at is 2007. And the thresholds are quite high for capitalizing assets. So I guess my suggestion and my recommendation would be that council look at that as a project in 2024 to review the tangible capital asset policy and see if they're still appropriate, or if any can be changes. Perhaps the thresholds could be lowered a bit, maybe the terms. I noticed that under the tangible capital asset policy, computer equipment isn't by itself, and that might be, it's just included under machinery and equipment. That might be something that council might want to consider, is just, you know, breaking down computer equipment, because of course, computer equipment has a shorter life than, let's say, a tractor or something of that nature would have a way longer life. So that would be just my suggestion in terms of tangible capital assets, to look at that, you know, every 5 or 10 years. It's a good idea for council definitely to review the policy and just make any changes as needed. And of course, there's a comparative numbers for the prior year. Okay, so before I flip on to the policies, does anybody have any questions on any of the schedules?
Carrie?
Going back to the expense on environmental services,
Sorry, which note or which schedule are we talking about?
just give me a second to find it. Goes back to the consolidated statement of operations and accumulated services.
Schedule 4,
Well, this one,
on page 5.
the consolidated statement of operations and accumulated surplus.
Oh, okay. So not,
Revenues and expenses.
yeah, I'll flip up. Okay,
Okay, so under environmental services, you said that we would get more detail on it in a schedule? So where would that information be? 'Cause I
and
missed it.
environmental,
Yeah,
sorry, I don't think I said that. Environmental services?
yeah,
This, the one,
the expense for 1.27 million or 1.227 million.
1 point. Oh, that's the budget. I don't think I said it about that one. I think maybe overall in the segmented by object, maybe. Are you looking for to see what's in that account, or?
What makes up that 1.2 million expense?
Okay, there isn't anything in the statements that gives you details, but I mean, I can let you know what's in there.
Please,
Okay, just give me a minute. Let me just look at my file here. I can pull up that account.
I think you mentioned something about statements or schedule 6.
Schedule 6 is tangible capital assets. So that's just I just went over that in a lot of detail. Yeah, Schedule 6 is tangible capital assets. Okay, so you're looking for just environmental services, the 1.2. So environmental services includes the water supply and distribution. So that's the water. So it includes amortization on those accounts, as well as for the related infrastructure. There's going to be the water purchased as part of utilities, as well as the salaries related to that. So you've got your staff that does some work associated with that function, as well as other purchased goods and supplies in there. There's also in there is the Highway 2863 water line payment. So that's 119,000 of that is related in that water. as well as under the same function is the water treatment and disposal. And that's about 123,000 for the same types of expenses. That also has a little bit of debenture interest as well in there. As well as we've got the staff related to that function as well, their costs. There's also garbage included in there. So we've got the garbage function, which is there's a collection contract, which is a subcontractor, about 234,000, as well as some other, you've also got some staff in the town that also do work related to the garbage function, and supplies, and of course the amortization related to some of the infrastructure related into the garbage function. So those three functions are included under environmental services.
Okay, thank you.
Okay.
And then
Terry?
one more, where would the reserve accounts be? Like you said, we used $10,000 that we transferred up.
That's on Schedule 4. That's this one. So you can see in here the reserves in here. So that's under the restricted reserves on Schedule 4.
Laura, you had mentioned that that was for the CN. I don't think that total was the whole CN station. There was two things. So if you could explain that one, the CN was under 3,000, right?
Yeah, the CN, I think I'll give me a second. I'll give you the exact amounts here. So the CN was 2,491 and the natural gas was 8,050.
It was two motions.
That's the motion, right there.
Right. Thank you.
Terry?
Can't remember.
So then, when we go back to the reserves, basically what we're saying is in 2023, we started off with 613 unrestricted, right?
Right.
And at the balance of the year, we were down to 1.86.
Actually, I just noticed one thing. I just see that just noticed one thing when discussing this. The reserve should actually go the other way. I think this is just, it should be a minus from restricted to the general. So that'll be a small change. I'm just noticing that. That's just a formula error there. It should be the other way, where it's a minus of the 10, and then it should be a plus here, because I think the reserves are transfer out opposed to a transfer in. So there'll be a slight change. I can give you the amounts here. So it should actually be a minus 10,541 now that I see it.
Out
So-
of restricted.
Yes, it should be the other way.
And positive into unrestricted.
Correct, yeah. So it'll be, I'll just give you the amount. Sorry about that. I just noticed that as we were
But
talking.
that only changes it by $10,000. It's not very much.
Yeah, it would be an actual 20 because it'll be not a minus. So it'll be, I'll just give you the actual amount so then we can correct it for the draft. Okay, so ending unrestricted should be 207,893. So I'm just going to make a change on mine and I'll correct that for the final. And I guess if council can just approve these as amended, and then that's the correct number. I'm just noticing that. As I said, this is just I think it's just a formula, didn't come out right on the statement. So I'm glad we caught that. So that should be a plus and that's a minus the other way. So yeah, the ending unrestricted will be 207,893. And then we move on to restricted reserves. That will change and I'll just figure that out right here. I'll give you the ending balance. Okay, so that'll be 1,999,992.
Okay, pardon me?
1,999,992.
1, 2 with 5
Yeah,
lines in the.
yeah.
Okay. And this doesn't change anything with the accumulated surplus. We had the adjustment incorrect. It's just, like I said, it was just a formula error on this statement. So everything else is correct anywhere else. This doesn't impact anything else. It doesn't change the net surplus or anything. It's just that, just the bracket and minus went the wrong way. So But it does change the ending unrestricted and restricted reserve. So you can see the totals there, less on the restricted and a little bit more on the unrestricted surplus.
Terry?
So under the restricted reserves, is there a schedule that says what that consists of?
We don't have that. We could put an extra note in. That's not required.
Okay,
If I know some clients want to see that breakdown, you do have, that's a bunch of reserves put together. So that's like the local improvement surplus, the.
Yeah.
There's a bunch of them, but they all equal that. They're just considered restricted reserves. It's up to you if you want that broken down or not.
Any other questions? Nope, there doesn't seem to be any other questions.
Okay, sounds good. Okay, thank you. Appreciate that.
Thank you, Laura.
All right, moving on to the notes. Okay, so these are all the same as I mentioned. These are the policies, Canadian Public Sector Accounting Standards, which are all standards that municipalities follow, as well as there are a couple extra notes that are required just in Alberta under the Municipal Government Act. So there's 2 of those, and I'll point those out. And these are just extra disclosures that are required just in Alberta. So these would be the policies that we follow. So I'll just point out a couple key things in the policies. There weren't any changes from last year, nothing big overall. It is considered consolidated, as there is, the town also has the Town of Smoky Lake Mineral Rights Development Company Limited. There's no transactions, but they do own this additional company. And then if you know everything, we were to become active, we would incorporate any of the revenues and expenses and assets right into this reporting entity. But we still report it as it is part of the town's records, even though there's no activity in it.
Terry has a question.
Oh, sure.
that name of that limited company is not Town of Smoky Lake. That's a error. It's Smoky Lake Mineral Rights Development Company Limited.
Oh, okay.
We just had our AG or our annual meeting prior to this. So
I'll make a note of that. Let's get that correct then. That might have been in there for a long time then.
probably.
Or yeah. Okay. Sorry, let me just flipping to my page here with that on there.
Marianne?
Yeah, if I may then, Laura, what you're saying then with the mineral rights, there's no money associated to the GL, it's just inactive, or there's?
Correct. Yeah, there's nothing in there related to that. When we came on as auditors a number of years ago, it was exactly the same. So nothing's changed since then. I just know that the town does own that. And that's pretty well as far as I know. Sorry, and the name of it was just Smoky Lake Mineral Rights Development Company Limited, not Town of, just Smoky Lake.
Correct.
Right, okay, sounds good. Yeah, I made a note of.
Crystal could forward that to you if you need clarification.
I'm sorry, I didn't quite catch that.
Crystal can forward you the information if you
Oh.
didn't have it correct.
Sure, yeah, that sounds great. Okay. Any other questions on this, I guess? Okay. All right. So, yeah, these are all the same policies as last year. This year, we did account for asset retirement obligations, as I mentioned. There was a little project undertaken by the municipality to account for those. So as I mentioned, asset retirement obligations are those related to whenever an asset is no longer in productive use. If it takes something to actually retire from it, that's a new item, but it's been a policy that was for it's again a public sector accounting standard policy. Moving on to the note numbers, these ones have a bit more information, which I think is good information. Again, break down the cash and temporary investments. This is the actual amount that's in the bank account. So, and then I said a portion of that is restricted, as I mentioned, and then this is exactly to let you know what was in the bank account at the end of December. Note 3, investment in the MCC Smoky Lake Development Corp. So that also, besides the $10,000 investment, there is also a debenture a note that is owing to the municipality, and it's at 6.5%, and they should be repaying that in payments starting next year of 100,000 plus interest. So that's, and we checked, the county has the same notes. We confirmed this year that we have the same disclosure. So then we're sort of matching what the county did. They released their statements and had this disclosure. So we just matched up what the county had. So then they were consistent on both the town and the county of Smoky Lake. Related party transactions. So you can see this is again related to the MCC for Smoky Lake. That's the $590,000 note. And then this year there is an accrued interest. So they accounted for interest owing on this 590 over the 2 years. So 40,000, which would be the interest, and it should be considered to be started to be play out the 100,000 plus the interest at the end of 2024 coming up. And that's considered related as there's a 50% ownership. The town has a 50% ownership of that corporation. Property taxes, as I mentioned this year, there's better collections, and you can see in here more of the arrears were collected. So current taxes, those are property taxes for 2023. So that's what's remaining to be collected. And of course, arrears would be 20 older. So it's definitely good to see better collections. And there's no allowance for doubtful. These are fully collectible. That is, if you know, after a number of years you aren't able to collect, you can definitely seize the property and eventually even go to tax sale to collect the property taxes. So we don't think any of this, as well as the town, you know, agrees that there's these are 100% collectible due to the powers that municipalities have to eventually collect on these property taxes. Grants and receivables from other governments. You can see in here that we've got all the standard type grants, and you can see what's been received. And the largest one this year is the new one, is the Regional Water Facility and Reservoir Water Transportation Grant. A little bit of that was paid in this year, did receive, and this is the remaining amount that's to do with the associated project. So really good. Again, one of the comments I have is I know management does a really good job of getting applicable grants whenever possible. In there. So, and then the other one is the Aspen View School one. The money was received after this year to pay for that. So that went to pay for the infrastructure related with the school, and that was received in 2024. The remaining amount was confirmed and received in early 2024. But as of December, still having this amount only. So total grants, 4.354 million, a little bit of GST, and of course, the GST is the 5% that all municipalities can claim back. So on all your expenses, you can claim back 100% of your GST paid. So overall, grants and receivable from other governments, 4.470 million. Notes receivable, as I mentioned, these are all just, most of this would be the debt charges recoverable. These are on projects where local improvements, where the residents of those specific areas where work is being done, that's being, they're repaying that on their property taxes over time, as opposed to paying up front. If a property gets sold during the year, then they remit the whole amount owing on that property. And of course, the only one that's not like that is just the one here from the Smoky Lake Development Corp, which again is that $590,000 note at 6.5%, which should be starting to be paid back 100,000 beginning 2024. So no new notes receivable during the year, just mostly repayments. These ones are being repaid, and of course, this one will begin to be repaid in 2024. So the total there is 793,000. And of course, this is the repayment schedule estimated over the next years. Tangible capital assets, I already went over that in schedule 6, but this gives you a little condensed version of that in note 8. Deferred revenue, this of course is future revenue whenever costs associated match can be brought in. First, we've got all the grants in here. So there's the Canada Community Building Fund and then the MSI Capital. These two are automatic allocations every year from the province. So usually every municipality in Alberta will get a portion of this allocated. And then of course, as projects are approved, the government will release those funds to do projects that are just approved by these two grants. Excuse me. There's some additional small grants in here, as well as you can see the Aspen View School, that was fully completed, and of course, the final receipt of that was after the year end, but the project was completed in 2023, so that was fully brought into revenue. And then the rest of the money was given related to this grant in 2024 received from it. There is that new item, the Regional Water Facility Reservoir Grant. That's the full amount. The project wasn't started yet at the end of the year in 2023. So there is some of it still, they did send some money over and it hasn't been spent yet. So once that project gets going and costs are incurred, we'll be able to bring that into revenue. So overall, deferred revenue, the 4.163 million. There's also some prepaid taxes. These are residents that pay ahead of time. So they're on a payment schedule and sometimes they just get ahead of things. So as their notices get issued in 2024, this will be brought into revenue. And then of course, a little bit of prepaid utilities, same thing with the utilities. They're paid a little bit, some of the accounts are in a credit position as they've paid ahead of time, and that'll just be applied in 2024. So total deferred revenue, 4.189 million. Moving on to the trust funds, the town also manages a few other funds, which are not the town's money, as they're just a contributing partner, and they just manage these funds. The first one is the physician recruitment program, and you can see in here the breakdown. There's contributed amounts by all the partners. And then we see where the payments have gone out. So these are the program disbursements. And then interest incurred in a small grant received. So this gives you the end. So these are maintained in a separate bank account, which is really good to see. That was one of our suggestions a few years back, that a different bank account be utilized for that. And so then this year was a full year when the separate accounts. So that's good that these are sort of kept separately as they are. These aren't just the town's funds. So it's good to see that they're completely kept independent in a separate bank account. And of course, this year there was quite a bit associated with that program due to the program disbursements. And then there is another small trust fund, which is the Ukrainian Twinning Committee. And of course, that's the same thing. It's in a separate bank account. And you'll see in here a little bit of balance left. That only began in 2023, nothing last year. And we can see a little bit of balance there in that other trust fund. Long-term debt. So the prior debt, which was, you can see there's no, in terms of debt incurred for tangible capital assets, this would be the older debts and when some of the projects were taken on in the past. And then there's a new one this year, which was for the Aspen View School daycare. So this is the 240,000 that was incurred for that this year. And of course, that was paid out after the year end, but payable at the end of the year, as I mentioned. That was owing at the end and was paid out in early 2024. So that's the only new one in here, the new debenture related, which of course was approved by council and included in through the financing. Again, this is a pretty good rate, 5.13. I know it's higher than the other ones, but I mean, if you were to go through a bank, you'd be looking at probably 8 or 9, maybe 7, 8, 9%. So it's good to see that Alberta Capital Finance is still giving pretty decent rates depending on that. So that's what that is. So total long-term debt, 688,000, almost 689. And there's a breakdown of the expected payments. So then it's good to know what the principal payments over the next few years is going to be on those debt. The debt limit, this is the first of the 2 required notes by the Municipal Government Act. So just in Alberta, and it sort of holds a twofold purpose. The first one is Municipal Affairs likes to keep an eye on their municipalities. I know they do look at this note, and if there's issues, they will contact municipalities. The second one is just for basic planning to see sort of what municipalities can afford in terms of debt. So the first line is the debt limit. So this is the maximum the municipality could take out. And then we see what's been utilized, only 688, which is the number up here. And then we see that leaves 5.480 million. So there's quite a bit left. If you wanted to take on a large project that there weren't enough cash reserves or grant funding, this would be what would be available. So again, way below the debt limit, no concerns there. And then the debt servicing limit, this is an annual limit of what would cost you to service that debt. Again, way below the limit. So the town is in great shape that way. And Municipal Affairs wouldn't have any concerns looking at this debt limit. Equity and tangible capital assets. So you can see that in terms of the tangible capital assets, and then the amounts related to the debt down here. So that leaves you the equity and tangible capital assets number, which is that less the long-term debt and debt charges recoverable of the 8.55 million. And you can see a net increase due to the large amount of additions and then repayments of debt.
Terry had a question regarding the debt limits. I believe.
Yeah, why is there such a difference between 22 and 23? 22, we had a debt limit of 11 million, and now in 23, you only have 6.
Yeah, so last year, I'll just show you where this comes from. What it is a straight calculation of 1.5
Yeah.
times revenue. So last year, the revenue, I'll just flip to that page and I'll just show you where that came from. Yeah, so if you look here, it's based on this number. So of course, it's because of that unusual item, which was that solar,
Yep.
the grant given. So it's just a one-off in the prior year. I would say this would be more of a normal year where you would see kind of the sort of budgeted revenues, but it is a straight calculation. So that's where that came from. Okay. All right. Look up authorities pension plans. This is a required note. It just discloses the information. The town of Smoky Lake, of course, the employees are under the local authorities pension plan, just discloses the rates and how much we're paid into that local plan every year. The salary and benefits disclosure, excuse me. This is the other required note for the Municipal Government Act. And as I mentioned, all municipalities have to disclose this information just across Alberta. So this kind of just lets you know what all the amounts in here under salary, and then the CAO amounts, as well as the chief or the designated officers. There were 3 of them. So it just discloses that information. Moving on to contingent liabilities. I know there was, there's only one claim, there's no amounts, but just that needs to be disclosed that there was one claim file. That's a new one. And of course, no legal costs is that legal counsel's the opinion that municipality will succeed in defending the application. So, and then there wasn't even a specific amount. They're just seeking costs for this one claim, and that's the only one, no other claims. Contaminated sites liability, of course, that includes both the 2 gas well sites for that, so that I can see the cost in there, and there's of course the landfill as well. And we can see in that every year there's a little bit of remediation work done on those, so that's what's remaining on that. And then we've got a little bit on the landfill site, the 20,000, no change there, so that leaves the contaminated sites liability. If that ever gets fully remediated, this would be cleared up. If later on there's an assessment done by an engineer and they come up and say, no, we still have, at some point you'll have to get an assessment done again, and then determine if this amount should be increased. So it's been on here, like I said, we came on as auditors. This was set up many years ago. So, it is good. I would say, once every, 5-10 years to get that reassessed again to see if this is sufficient. It might be too much, it might be too little, and then just to make an assessment there. Contractual right. This is to do with the Métis Crossing Solar Limited. That was where the grant money were issued. And then it said we're expecting to get some 15% of net incomes beginning in 2024. So hopefully that'll work out and we'll see some return on the investment there coming in 2024 and future years. So there's a contractual right there. Contractual obligations, that's that amount that was included under the environmental function. As I mentioned, that was one of the questions there. And you can see in here that that's going to continue to be paid off a number of years. This is what's remaining on that. So that'll be paid off 119,258, and then that's every year and until that gets fully paid off at the 1.7 million. That's the asset retirement obligation. So that's letting you know where these were received, where they were from. Where there was, again, it was related to the asbestos, estimated asbestos, that if these were ever to be demolished, these buildings, that would have to be remediated. And of course, somebody would have to come in and pick up that, go through the building and dispose of that properly. So that's what that's related to. And so that's the cost. But these are, they would be the expected cost today, present value it back. It's a bit of a calculation. There were values given and then in the future. And of course, with the estimated expectancy. So CN station expected in 2038. Again, these are all estimates. As we get closer, maybe it'll be renovated, maybe not. And so then every few years you would want to again, review this and see if these are still adequate and look at these standards. Again, these are estimates, just like amortization is. And that's it. Any other questions on any of the notes?
Terry?
So when we go to the asset retirement obligations,
Yes.
there's none for the museum or the drop-in center.
No, museum is here. It's just on the second page.
Yeah.
It got cut
Oh,
off.
okay, sorry. Thank you.
Yeah, no worries. Yeah.
No other questions? No? No other questions so far, Laura?
Okay, no, thank you. I appreciate all the questions. It's good that council understands the statements and, you know, we're gonna make a couple changes as indicated. So if council would approve the statements as amended, then we can finalize them and get these, we will file them with the municipal affairs.
All right, we will be doing that a little bit later on in the agenda. Or did we, right?
You don't need it right now.
Or, right, yes.
Then we'll send you the motion after the meeting.
You're okay with
Laura?
sending the motion
No
after?
problem. Yeah, just shoot me an email if they're approved and or if there's any other changes, let me know. And that's it. I can proceed to finalize as soon as I get the okay. Thank you.
Okay, thank you, Laura. All right.
All right. Okay. I guess that's it for me. Bye, everybody.
Thank
Bye.
you.
Thank you.
Bye.
There we go. And then we have timing. Yeah, it's 2:00. It's heading online, that doesn't.
She's right here.
Oh. I saw you walk in.
After looking at financials, I get it.
Come on.
Where do you want?
If you want it.
No, I know.
I don't know, maybe she still has the.
You're gonna sit behind me. Oh, no.
Who are you creating 22? So, Physician healthcare.
I don't have that agenda ready yet.
Okay, before I sit down, everybody stand up, because guess what? I drove almost all the way in pouring rain. And just inside of Vilna, it poured, like everybody slowed down on the highway, it was pouring so hard. But it was a good steady rain on and off, pretty much all the way, so let's hope that continues for a couple of days.
$1 million.
Yeah, I think I was singing $1 billion rain actually when I was coming.
Go.
Yeah, and then it was a good steady, I mean, that one part was really, really
Thing
heavy.
is, I'm gonna be in deeper shit than
Uh-oh, what did you forget to do?
Rotovate garden.
Oh, yes. I was scared to do mine, it was so dry, right? And I just thought maybe it wouldn't be good in case we didn't get moisture.
Well,
Yeah, it was good. Started just as I hit the highway
and
and.
guess what? We have a field in town and we had it worked over the weekend and left a bunch of mud for all my friends and family and neighbors. So I'll be giving out vouchers to the car wash.
Yeah. But that's okay, they're not gonna mind.
Better than dust.
Yeah. Yeah, and it's so dry. It's very, very, very dry. Oh, wait, he comes back.
Okay.
But yeah, and then they're talking about it's not gonna like next couple of days. They're talking it's gonna stay.
Good.
So that's good, right?
I should probably turn the heat up in my house then. It's pretty cold. I was like 19, I was like, oh.
I've been keeping the wood stove going in the basement, just enough.
Keep
to-
the.
Like if you
moisture,
warm the
yeah.
basement up, it just kind of keeps the furnace from coming on. So.
Scary to sit on the couch. This is so cold.
My house is never cold.
I know. I turned it down to go.
I like it warm. That's why I was able to get a hairless cat. She'll like my house.
Yeah.
And a chihuahua.
Yeah. They're a good fit.
Yeah, they're a good fit for me.
You're more than welcome to start when you're like.
Sure, I mean, I didn't really know what you wanted. And I thought, when Dawn, you had said that you
It's
were.
kind of stemmed from me because
Yeah.
I didn't really know exactly what community features does and partly because a lot of the agendas are enclosed and a lot of it.
They
So I
are.
thought it would be nice, so I asked Evelyn if she'd mind if I invited you, because as the rep on that committee, because I think I knew it would be good for me to know more about what you do for our area. So I had kind of reached out but I don't think I communicated well to council. I apologize. I was talking to Amy this morning, like, oh, this stemmed from me, actually, I'm sorry. So I should have, but anyways, that's why she's here I thought it'd be good for us all to have a better understanding of what community does.
What we do and what these ladies do and they hang out with me. Right? Maybe we won't tell them at all.
What goes on in St. Paul?
Yeah, exactly. So yeah, Penny Fox. I am the general manager of Community Futures, St. Paul's Smoky Lake region. And I think all of you are pretty familiar with what we do, but I mean, basically, we are a not-for-profit organization that has a federal government contract that is there to support entrepreneurs. So at the end of the day, that's what we do. Mostly Community Futures, there are 297 Community Futures offices across Canada, 27 in Alberta, all in rural locations. Well, mostly, all that were rural locations in 1987. Some places like Red Deer are not considered rural anymore, but their offices still, they haven't closed any offices, they just keep servicing. But you won't find us in Edmonton and Calgary. Business Link, other services do similar things to what we do, but we were started at a time when employment was a problem and there weren't enough jobs in Canada. And someone in their wisdom, and I don't know who it was, I understand now, recently we were told it was during, oh, and I just lost his name.
Turner?
No, the Prime Minister that just died, isn't that terrible? Mulroney, yeah, like it was just gone.
You do?
Because I didn't know, yeah, like, right, I didn't realize it was during his government that Community Futures started, because somebody had the idea, we want to put rural people to work, let's start some small businesses. All these years later, 30, almost 40 years later, that's still true. Over 90% of employment in Canada is still through a small business. And a small business, they say under 500, but you know, even under 100 employees is where most of our population is working. So, and I think that's why Community Futures is still here. At that time, it was kind of like, let's do this for a couple of years and see what happens. And it was a program and let's throw it out there. And unlike most government programs, we're still here. At the end of that 3 or 4 years or whatever it was at that time, I was pretty young back then, I was just born. Someone must have did a report that actually said, look, this is the amount of employees that are out there working in this number of small businesses. And we think that this money is well worth it. Because every year we see the same numbers, the numbers keep increasing, the number of small businesses keep increasing. And we're still here. We do 5-year contracts now. When I first started 12 years ago, we were at a 1-year contract. We went to 3-year contracts and we're back to 5, which I am forever grateful because it's hard to keep staff when you only have a 1-year contract and nobody knows if they're going to have a job on April 1st. So we are mostly known for loans. So typically what happens is someone has a business idea and they think about it for a little while. If they know about Community Futures, they come and talk to us and we help them put together a business plan, marketing plan, we help them get their cash flow in place so that when they go to the bank to look for money, they've got all the things the bank is going to ask them for. Those that don't come to us first, they'll typically go off to whoever their lender is, their banker is, and the banker will say, well, I'm not really sure, we need to see a plan. So they come to us and we help them do that plan, or the bank will just flat out say, no, we're not into that kind of business. And over the 30 years, the banking industry has changed. Sometimes they'll take that risk for new businesses, especially. Sometimes they won't. Sometimes they like to lend in rural, sometimes they don't. The Community Futures has been that place where if the bank says no, you can come to us and then we will do the loan. So the first part we do is that coaching and that helping to flesh out your business idea. And what we say is, let's get what's in here onto a piece of paper. And then Jody works with that client so that he can understand and they're telling the story. And this is why we're very different than a bank. Person comes in, it's at 1-on-1, they tell the story, this is what I'm thinking of doing. There's questions back, coaching questions back. And before they leave that relationship, and it could be 1 visit, it could be 3 visits, it could be a number of visits over 5 years. They establish then, is this going to work or isn't it going to work? And if it's going to work, they go to the bank and get money, great. They don't, they'll come back to us. And then our board has a decision of whether they want to let that money. So then our board sits there so the loan has been written up by Jody, he vets it through me as the manager, and then it goes to the board. And as these ladies know, the board says, okay, is this the person that can run this kind of business? And is this the business that's going to fit in our community? So that's why the local representation is so good, because every community is different. You know, so then that discussion happens, and if both of those things are yes, then that person is given the loan. It's generally a 5-year term loan. pretty simple, not complex. We don't have a spreadsheet, we don't have boxes to fill out, we don't have ratios that have to be covered, like the bank. Now, when you go to the bank, the loan is, it's a series of check boxes. And if you hit one, then you might have, that lender can't do it, it has to go to Toronto or Calgary or Edmonton or somewhere. We're not like that, all those decisions happen right in our office, and it's from that conversation. So yeah, and we have interesting conversations, right? Because those conversations are about our community and they're about that person. Do we know that person? Do we know their family? Do we know anything about where they're working? It's all of that kind of conversation. So, so we do some interesting loans, right? That the banks wouldn't touch, right? Because we know the community and we know that business is important. Are we successful? Not all the time, no lender is, but we're running a smaller loan loss than the average bank. And so we're happy. And we actually have a couple of clients that continue to, are we live streaming? We do have a couple of clients that are great because this is community, right? So we have a couple of clients that continue to pay us even though the business hasn't been in business for a couple of years, because they understand that that pot of money that we were given, if people don't pay back into it, we can't give more loans out of it. So it's a good feeling to know that as we're building that pot up, then the next entrepreneur comes along and they're able to reach into that pot and to get that money back. So yeah, it's as simple as that. And the process hasn't changed, and I don't think it's changed in 25 years. When Community Futures first started, we didn't have the money. We were simply there to help get the business plans ready and get them ready to go to another financial institution. And I don't know, somewhere our financial will tell us, but 25 years ago or so, we did get our first loan pool. Then we got a second loan pool. Then we got a loan pool around disabilities, entrepreneurs with disabilities. And of course, during COVID, we got a loan pool for the Regional Relief and Recovery Fund, which is very similar to the CEBA loans that the bank was giving. And then the province also in the last year and a half came up with a CGI loan, which was for female entrepreneurs. So we actually now have a contract with the province to do provincial loans as well. That we've just found out that that money is going to stay in our organization and we're going to be able to continue that loan pool into the future. So we have lots of money. Ask now, she's our treasurer. So we operate through an operations grant, so we are given a grant every year. That hasn't changed since 2009. Federal. Comes out of Treasury through Western Economic Diversification, through which has now been renamed PrairieScan. And that comes out to us, and so we have an operating grant. So the money that's made, the interest that's earned on those loans is not for operating. Loan money is loan money, and operating is operating money, and the two can't touch unless there is a special approval to use some of the interest. So, but we have to have special permissions to do that, and we have to tell them what we're doing with that money. I don't know, we have a provincial association. At the provinces, so we have an Alberta association, there's an association in Saskatchewan, in Manitoba, and in BC. Those also work together for what's called Pan West. So we have another group of Pan West that also represents us to Community Futures Canada, federal Community Futures.
How many come from entrepreneurs, like would be about from Smoky Lake to St. Paul? Like what's kind of the ratio? Like?
So it changes. And when I first came, we actually probably lent to just about every business in Vilna.
Oh, okay.
And thought at that time, we always talk about times were good then, because otherwise we probably would have owned most of the businesses in Vilna. That switched about 8-9 years ago. When did Michelle Wright start working with economic development? We saw a boost in those first 2 or 3 years. Most of our clients were from Smoky Lake region. Right now, I emailed Jody this morning and said, tell me the numbers. There are 3. We have 3 loan clients from Smoky Lake right now. We average anywhere, I think we're around 50 loans on like coming and going.
Okay.
That's a little high because of RRF. But yeah, we don't do lots. We do between 9 and 12 loans a year. The difference is that we work with those clients as they're building that business as well. The other side, so that's mostly the loan side. The other side of Community Futures is we do community economic development. And so each of our offices has a number of projects that we're working on, either in isolation of ourselves for a certain community, for our region, or for the overall region. And so those things come and go based on the need and based on what the projects are. So most of you are familiar with Lemonade Day that's coming up on June 15th. So that project has now been grabbed on by most of the Community Futures offices across Northern Alberta. So I think there are 53 communities that are doing Lemonade Day this year. Some of you will be aware of the Connect for Food. That's a project that we're working with the 6 other Community Futures offices in Northeast Alberta around food. What's the potential for growing more food? We started around the Northeast, but this project will expand, no doubt, across Alberta. What's happening with all kinds of food? And so those people that are growing in their gardens, selling in the farmers markets, those are selling in places like Servant, or people like Servant who are selling out, into the cities or into an international marketplace. Who's producing? What are they producing? What are we processing? What are we doing with our berries? What are we doing with our meats? Like all of those. So we can get a good fundamental understanding around how do we get that food from the person who's growing it, making it, raising it, to the person that's eating it. And that's a 3-year project. We received a significant funding to do that. And we are the lead on that project. And so we've been doing a lot of talking about food and how far we've come from the understanding of food, how far our kids have come from the understanding of food, and how complex the global food system really is. Because producers get into want to do something, and the rules and the regulations are complex, even more so than what we realize. The other project, we're working with the Northeast Alberta Food Marketers Association, which has been around for 15 years, around women and minorities who are in the food production business, but need extra money to upscale their production, to buy equipment, but they need to have an investor. And so we are involved in a national program called Venture Ready. And that program, it's free training so that those women can go in and they can get their books in order. They can become more confident about selling themselves to an investor, so pitching themselves to an investor. And we're also, on the other side of that, working with more Canadian investors who want to invest in food, and then putting those two together. So yeah, so there's never a dull moment. This year, just in the last 6 months, our provincial association has called what I'll hand these are the Zebra program. So if you know any entrepreneur that is neurodivergent, so autistic or anything on that spectrum, we have a special program now, and we have neurodivergent trainers who will work with those clients one-to-one and find resources for them so that they can start their business. The other program we're running is a digital service squad, and that was a provincial program, federal and provincial program, where anybody that's running a business who wants help with anything digital, anything from how do I work on my website, build a website, mostly social media, any of that kind of computer related information can come, and we have this is again a regional program, but we have 2 staff that will walk them through on a one-on-one basis of whatever it's they do.
Okay, thank you.
And we're happy because when that project started a year and a half ago, most of the questions people were calling up and saying, like, I don't know what everybody's talking about Facebook. I don't know where to start. How do I get on? Those conversations now are, I know that, they've got past Facebook, they've got a new website design, and they know how to update those things and start looking for content and putting the content in there. And we're getting larger businesses that are calling us and saying, hey, I'm an XYZ, in business XYZ. I know that there are programs or there are apps or there are something out there that can help me. can you help me sort out what that is and which is the best one I should use? Because it's such an overwhelming, we all know how many rabbit holes have we fallen into when we go to look up a recipe, let alone, a new program for our business, right? So, the staff at Digital Service Squad will help. Sometimes it's just a listening board. Hey, have you checked this? Cybersecurity now is of course a concern. And so they're walking businesses through that as well. That project is slated to end the end of September unless I can find some more money. So, we're pushing. I've been to the province and to the feds, and we're pushing to see if we can get that to continue. Because let's face it, computers are not going away. Digitization of businesses is not gonna go away. Right? We're gonna do more and more and more and more and more. And the province right now has a digital literacy program that anyone can take for an individual. Businesses need that too, because we're not going back. We're just not. Business is never going to be the same as it was before. Staff, I have 3 staff. Well, not really. So I have a full-time loans officer. Most of you know his name's Jody Fowles. He's been in this game longer than I have. He has spent most of his life in Community Futures. He came out of the banking industry at a time years ago when the bank started to talk about, oh, we should sell insurance and we should do all these other things. And Jody is the type of person, I just love it because he loves to get a set of financials and be in there. Oh, we could be doing this and we could be doing that. And he likes working one-on-one with clients to build their business. So that's why he moved over to Community Futures. And we've been very fortunate to be able to keep him for 15 years. And he's there full-time. I do have another full-time position that Judy retired in December. So many of you that have known Judy, because she's also been there for 12 years. She retired in December, but she's back because the person that replaced her decided to go back home to family. So we're now in transition again. So we are looking for someone who would like to step in and take on that admin support and programmer support. And if we get the right person, we'll follow my footsteps for the next 5 years and become the general manager, would be our hope. So if you know anybody who's out there that really would like to do that, have them call me because it's a great job. I've done lots. I was in the municipal world for so many years and in FCSS and love that too. But this is really good too, because you're still building community, you're helping community, you're helping people in a whole different way that is not crisis intervention or is not having to collect their taxes and their water bill. So it's a whole different way of serving the community, and it is a fantastic job. And I have a fabulous board now, and I have always, since I've been there, had a good board. We work well together. And there's always ideas and always things that we can do. It's never boring. From the municipal, I'll just keep going until somebody asks me a question. From the municipal side, you mentioned our board. Yes, our board meetings are closed to the public because we are talking about people's personal business. And but what I do is I do a general manager's report. So every month this is available from your representative. And it's just a very high level what we've done. Very simple. I know most of my board members are municipal councillors. They see enough pieces of paper go across their desks from the dozen or so committees and council that they're on, that I try and keep it clean and simple. But it does, because they're a board and they have certain responsibilities to make sure that the things that we're supposed to be doing as a staff are being done. And normally I have stats on the bottom because this was April, we were in a brand new year, so I didn't have any.
Well, I think that's what we were looking for, just an
Yeah.
overview. Marianne, your
I
question?
have one question, if I may. So historically, you had the office here in Smoky Lake, and it was manned 1 day a week or anything. Is there any appetite to relocate or have a satellite office?
So the flat out, not at this time, and I'll tell you why, it's money. We have not had an operational increase since 2009. And just before, that's when that whole thing started to shift, right? And it was around money. We couldn't afford 2 spaces anymore. And so until such a time comes that we can afford 2 spaces, we won't do anything different than we're doing now.
Right, because the value, we recognize.
Yes, yes.
We recognize the value and the benefits of
Yes.
having that within
Yes.
our community, so it's unfortunate
Yes.
that there's no money.
Yeah, and it's just the reality of it. Jody does, of course, travel to Smoky Lake regularly. He actually likes coming to Smoky Lake because it's a shorter drive home for him, because he lives in Vermont. And so anytime we get a call, he hits the road and comes this way. And we'll meet in different, depending on when the person wants to meet. And but yeah, ideally, we would have, here and in Elk Point as well, we just can't.
All right, well, time's sake, or do you have?
Just a comment that I referred a friend over for a business plan, and he was just amazed.
Oh,
at the
good.
Service and everything he got to get it together for his
Good.
thing, it was great.
Yeah, generally somebody calls today, we can, say, hey, can we meet you tomorrow? Because we are busy, but the busy work that we're doing doesn't necessarily, it's not appointment day after day after day. We can put the paperwork aside, we can go, make those connections and then catch up with the paperwork after.
Well,
And just really quick, you said about 3 loans in Smoky Lake, but that's not including the RRF loans, right?
No, those are,
That-
no,
there-
those were not
there's-
there.
Yeah, okay.
And so what's happened with the same as the SEBA loans, the RRF loans needed to, if you wanted the non-repayable portion, they had to be paid back, the COVID loans, by the end of January. Most of them weren't. But we do have a few, and what happened is they automatically rolled to a term loan, so they're on the books. And we'll manage those on behalf of the government. They're not our loans. We have a contract where we were just managing these because we're close to the ground. Interestingly enough, right, this is when Community Futures, I think the Prime Minister probably first realized there was a Community Futures. Because, everything was blowing up with COVID, right? There was so much going on. The banks started doing this. And what happened when the banks announced the SEBA loans, because all the banks, it was a joint discussion, it's my understanding, and then they did the SEBA loans, but then that left our COVID loans, COVID clients out of, they couldn't go to the bank because their loans weren't at the bank, they were with us. So there was a push to get to Ottawa and talk about this, and it worked because, to our surprise, one morning when the Prime Minister was at his doorstep talking about the day, he said, oh, and if you're looking for money, you can go to Community Futures and get Regional Relief and Recovery Funds loans if you can't get SEBA. We did not know that announcement was coming. Surprise. So, but 7 weeks later, the various agreements, because they were transferring hundreds of millions of dollars to all of those 300, you can imagine, 327 offices. 296 offices. So it came from Treasury to our regional authorities, then it came from them to our provincial authorities, and it came from the provincial authorities to our offices. So all of these legal documents and set of agreements had to work their way down through, as we knew, because we were signing agreements every meeting for a while. It took 7 weeks for them to do that before the money was in our bank account, before we could administer it on behalf of them. Interesting times it was. We've never worked so hard. But it was good work because it brought a lot of new people to our door. And my understanding is that not so much the town, but for the county, we did more agricultural loans than most Community Futures offices. Because we have a basic fundamental understanding of ag. And so we were able to have conversations with those farmers and say, what's changed? What's changed in your operation? And we could understand what that was, because we could understand cattle, we understand feed, and we could understand having to rent more acres, so.
Okay.
Right, I'm gonna leave these brochures here,
Okay.
and you can have in your office, and yeah, if you have any questions, oh, here's my business cards. Yeah. Ask these two, or give a shout.
For sure.
Yeah.
Thank you.
All right.
For making it coming in.
Yeah, and is it raining again?
It's pouring.
Yeah.
I think that's a great idea.
I'm gonna go have some ice cream.
Yeah.
Thanks.
Oh, and for my Community Futures hat, so can I step out of that?
Yeah.
And in my St. Paul Search and Rescue hat,
Okay.
which also covers this area, right? During COVID, we did reach out to our municipalities to help us get through that year, because you have a $7,000 insurance bill to pay for search and rescue, whether we ever move or do anything. Right, and we thank you for that donation, because that helped keep us going. So that we can continue to be in operation today.
You're welcome.
Yeah.
Thank you.
I remember that.
Yeah, well, we were nervous as many not-for-profits were, right? Because what do you do?
Yeah.
Because, and people were still getting lost
Mhm.
in that time, right? That doesn't change. In fact, more people were getting lost because more people, not so much for us, but like Rocky Mountain House and that Cochrane. I mean, they were out, I don't know how they did it every day. They were out because people were going to the mountains and getting lost and getting into trouble. Yeah, because they didn't know, not something they normally did, right? So they went out into the wilderness, not being prepared and you can easily get into trouble. So.
All right.
Thanks, Kenny.
Yeah.
Well, thank you.
Next time you need rain, call me.
Come back more then.
Okay, well, we'll move on to administrative report 6.1. You had a question.
Drive by the school every day. There's no 30 kilometer sign there.
Where?
When you turn off 855 to go to school
Coming in this way from the highway.
from 855.
Yeah, so that was brought up, I think, at the last council
Yeah.
meeting, and we were gonna reach out to the province, because it's not us.
Why isn't it? It's on our
They're
street.
855's there.
It's not 855, it's Stockbridge.
Oh, on Strawberry?
Yeah.
Okay.
Yeah, when you turn,
Oh, turn on to Strawberry and off of 855.
yes, and we have,
The other way.
no, I'm talking from 855.
Yeah,
When you turn to go towards the school, there's no sign. And we have two at the crosswalk. There's the new flashing one that's yellow.
yeah.
And then the white one that used to be there. So what's the difference between a yellow and a white sign?
It was covered in email.
Was it?
We've got them put up.
And we got the digital ones put up as per the motion, which was to be across from each other at
The flashing one.
the flashing
Yeah,
ones. We can put a sign on Stogren
Yeah,
right
we have
at the
to.
school, kind of at the corner as soon as you turn. I think it was just further up, but it should be
No,
on
after the
eight
school.
55. Because people coming in on 855 either from the old.
So when they
school
turn
or
onto
off the
Stogren.
highway, it should automatically be there and then, but we need one, so you're saying, can we get one just as soon as you turn on to Stogren?
Right, well, that's where you have to have it.
Mm-hmm.
Because when you turn off, it's 50 unless otherwise posted.
Okay.
And we
It's
have two of
actually
them at the crosswalk.
It's actually 30
That's
there,
at the
because it's
school
30
zone.
all the way down the hill to the stop sign. Maybe it
Yeah, but
doesn't
when you-
show it
But when
coming
you
off the
turn on
highway.
Dahlgren, it has nothing to do with 855, you're on town property.
You're identified as a school, so it's mandatory 30 always.
Anyway, yeah, I mean, it can be.
We can,
limited.
yeah, there was the old one that was further down, but we can definitely move it, and especially now that we have the flashing signs, we'll just move that one
Yeah, there's
further.
two of them at the crosswalk.
I think it was no.
Yeah, but not at the crosswalk. Before the school was there, before the flashing,
Yeah, it's always
non-digital signs were there was always, that road has been 30 all its life.
Not until we get to
You-
the
you're-
tennis court.
Yeah.
When you
It's
turn
not-
off 855, in my
No, I
eyes,
understand what you're
it's
saying.
50.
I understand what you're saying, but that road has signs. It's always been 30, but you want it farther to the west.
Listen to the rain.
It's not 30 unless it's posted.
It is posted.
No, it isn't. When you turn off 855 onto Stockton, there's no speed sign until you get to the tennis court.
I know, so you want the speed sign from the tennis court and farther west.
To 855 to the corner. So when you turn off 855, you know it's a 30 zone. Yeah, but that never was 30.
Yes, it was.
It's not posted, so it's not 30.
Okay,
Whatever.
well, okay. We're on
Any
it.
other questions?
I just, if
Oh,
I
Mel.
may comment, white is mandatory, yellow is discretionary.
But not school zones. You can't choose to do 30 on the school zone. You wouldn't.
But it's gotta be posted at school.
With a little picture of the kid and the mom walking. Anyway, okay, any other questions?
When it comes to the water report, is that part of this one?
6.2. So we'll need,
So I'll make a,
Okay.
yeah, go ahead.
so. I'll make the motion that Town of Smoky Lake accept for information the administrative report for April 6th, to April 24th, 2024.
All in favor? None opposed to carry. 6.2, that's utility reports. There.
when, I'm gonna ask for the numbers.
Okay. I would do my best.
So when you take our consumption times the water rate, does not come up with the revenue. What does the revenue consist of? It doesn't, our monthly water fee isn't in there, nothing?
The revenue would include anything like late fees and stuff as well, would it not?
Well,
So I have to-
multiply the consumption by the water rate, it doesn't even equal the amount.
I think we need to mirror.
Well, or bring it back,
Bring it back.
or bring it back. It's just
Sure.
something
Or
that I
we
noticed.
email that information and,
I'll bring it to the next
bring it to the next
meeting,
meeting.
but that's one thing I noticed, and if you go to them, there's no set.
Mel?
Well. Just from previous conversations, I don't know if this is accurate, so you might have to check, but the time that they get the readings to the time with the billing, they're not the same day, so they're not gonna match. That's why we said, don't bring it every month, because the water losses were out, because the readings weren't matching always consistently at the same time. So I think
The billing cycle doesn't match the reading cycle.
exactly,
100%.
which is why they're gonna be out. There's gonna be a discrepancy in the readings and the revenue.
Thank you.
Evelyn?
The numbers for 2023 for January are the exact same as January 2024. For cost of water under the water report.
you can double check that with Tamara to see if it's accurate.
But the consumption is
It's
different.
different, yeah. All right, any other questions about utility reports? Mel?
So there's no more questions, I'll make a motion of Town of Smoky Lake accept the written utility reports for gas, water, and solar services for March 2024 as presented.
All in favor? None opposed, so carried. And 6.3 quarterly financial reports. Okay. So, Marianne?
I move that the town of Smoky Lake accept for information the attached financial reports for January 1st to March 31st, 2024. Items inclusive A through E as follows: operating position, council expense report, accounts payable listing, capital projects, property tax arrears.
Right, all in favor? None opposed, so carried. 7, we'll move to deferred items and old business. 7.1, delegation Laura Mercado, senior in 2023 financial statements.
So this will be as amended, because there was that
Right.
one error. And sorry,
Dawn?
if I can just add to this, huge thank you to Crystal. The amount of questions that they ask for an audit, how thorough they are, is good, but it's a huge amount of work. So thank you, Crystal, for fielding all those. And there's days we'd be back and forth on, even though we're two offices apart, we're back and forth on Teams, clarifying things and whatnot. She did a huge amount of work. So thank you for all your work on this.
Evelyn?
And how long is it that Laura has been doing the auditor? Like, it's always Laura from Seniac. So how long has it been now?
She didn't do most of all the work on this.
She's the partner.
Yeah.
She's got a partner, okay.
She has people under her that do the work. I'd have to check how many years exactly.
I think they've been doing it since I've been on council, so that's good.
So six, okay.
Yeah, so that was one of the things that I think you, I don't know if there was a motion or not, but that's part of that we're planning on bringing back. We're gonna bring forward an RFP. You had asked how long have they been with us, so we'll make sure that's all clear. And so the idea is, and we've let them know already, you know, every so number of years, a municipality should do an RFP for different services, including this one. So we'll put, you know, we'll work on that and we'll bring back all that information, including how long they have been doing it. And then it'll be up to council that, you know, assuming they submit a bid, it'll be up to council on whether you continue with the same or you move on to another. So, make sure we have all.
Right, Terry?
I'll move the Town of Smoky Lake
approve the amended Town of Smoky Lake 2023 consolidated audit financial statement year ended December 31st, 2023. In reference to the virtual presentation given by Laura Wakar Cato, CPA, CA, Corporate Manager for Seneca and Company Chartered Professional Accountants. And the mayor and deputy mayor jointly signed the 2023 audited financial statements, and the CEO signed the management responsibilities for the financial reporting letter.
All in favor? None opposed or carried. And 7.2, delegation of futures Penny Fox.
So unless anybody has any questions about that or comments, I'll move that the Town of Smoky Lake accept for information the verbal report provided by Penny Fox, General Manager of Community Futures, regarding the nonprofit organization and what they provide to small businesses, community economic development, and support with small business loans across the region.
All in favor? None opposed or carried. And ICC regional fire update. So that was Evelyn and I. So there was a question on why we had chosen the transitional solutions route rather than the equalized payments. And after, or at the meeting, Evelyn and I had decided that because we felt that it brought the village of Wasetna and village of Vilna to the plate, I guess, with their 38,000 and 36,000. And we felt it would kind of balance out in the end once we do the rest of the negotiations with the extra cost on our end. So that was kind of where.
Do we have that?
This is
sheet in
just
there?
the sheets. It would have been in the package.
These are the agenda for the ICC,
Yeah,
not this one.
there's just the differences. So that was the reason why we made it. Evelyn, do you have anything to add to that, or is there any more that you felt made that decision when we were there?
Unless you guys have questions about it.
Terry?
So what's the town's contribution on the one that you decided on?
150,362.55.
And with going the other way? With
113,473.60 cents.
Okay, thank you.
Move and listen. You were on the last ICC meeting, so ask for a subcommittee, so that it would be just the town and the county negotiating.
Pardon me.
A subcommittee and sub-ICC committee, so it's just the town and the county at the next meeting. And then that's where, again, we are in a position because we have the assets, Wasetna and Vilna does not. They're completely covered by the county. We're the ones with the assets. We're the ones with the buildings. So if you're concerned about that money, we're gonna make it back in that discussion that we have with them.
Mel?
Just a question, what was the numbers for the villages if we went the other way?
Other way?
Yeah, I did, just so I have the full picture.
Yeah, okay, so do you want me to give you all the equalized payments?
Sure.
List, okay, so for the county, it'd have been 800, can I round?
Yeah.
850,000. Us was 114,000. The village of Vilna was 17,000. And Wasetna was 23,000.
Okay.
With the side, it's 775,000 for the county. We're 150,000. Vilna was 39,000. And Wasetna was 37,000.
Thank you.
Marianne?
So, and this may, forgive me if this is what you had just read, but in the motion for the background that Councillor Morton made on motion number 140, the second part of the motion, or it says administration to provide funding options on how to divide the capital assets. So was that part of what we were discussing here at this meeting, or was that something different?
That wasn't, like, that's not figured out yet.
That's what you were talking
Yeah,
about, right? The separate meeting, that's when the capital assets.
Where we won't have
Discussion.
Wasetna and Vilna at the table. just be the two of us, because they don't need to be a part of that discussion, because then we can discuss
Yes.
more what you want to discuss. Because there's no reason to have Bernice and the
So-
others.
Why I'm asking about this is if before we're planning to have this meeting, would we have an opportunity to look at what administration is preparing at this council? Because this motion was made at the council meeting, March 18th. So before we go into another meeting for the IEC, does it come back here?
I think it's the other way around. It'll be at the ICC and then it's brought here to go over with our councils.
Which is the way it was with this as
Yeah.
well too.
Yeah.
That it was brought at the one meeting, it came here, and then we went back to the ICC meeting, so now that we're past this level or this point, now it's the capital assets one.
No,
I think, because we had talked about this one before you guys, like, it kind of went here and then it went back to ICC. And that, I think that's why Marianne's asking, because originally on this one, when we talked about the split and what we had talked about it at our council first. And then it got discussed at the ICC.
Yeah.
But it is, I think, supposed to be at the ICC and then back here is the proper.
because it has to be
way.
passed by all councils before.
Well, Scott has to create the numbers, so it
Yeah.
gets presented to us at ICC, then it comes back here.
That's the update. Carrie?
The only thing is this subcommittee meeting or whatever, the ICC with the town and county. You're going there to see what they're gonna be offering us, or is it a negotiation?
I thought it was a negotiation because they were bringing back the inventory, what it's worth,
We have
and then we're going to talk about it all. No?
I think it's always a negotiation, right? Like, you're never going to,
Just accept it.
yeah, I'm sure they're gonna provide the information, but our administration has our own information, right? Like, we know what our assets are.
Well,
So, and when we talked, again, it was informal, not a formal motion, just general direction to get to the members on that committee. One of the comments that was made was just, you know, could we spread out the value of those assets out over a period of time so that we don't have a huge impact on our residents in 1 year? So that's what was kind of said at that meeting. So in theory, they'll bring back, you know, if we were just to sell it, what's the value, or if we were to do it over a time period, and they'll come back with a few options, but then we definitely have that opportunity. We don't have to make a decision there for sure.
Carrie?
The only thing is, at the last ICC meeting, all those assets were given to us. And there's nothing at the meeting. So if you weren't at the meeting, you wouldn't know. And when they say the fire truck is only good for 20 years, it has to be replaced. What they're doing is the same thing that our accountant is doing, is amortizing it over 20 years. But at year 15, it doesn't have only 25% of its value, it has more value. So what the county did in their list is depreciated everything, the assets that we are joint ownership on, to making them worth nothing.
But they
But they-
acknowledged
but-
that during the meeting that that
Yeah.
wasn't accurate, right? So hopefully they come back with value, not amortization, because they're not the same. And I think you guys, somebody pointed that out at the meeting.
Well, that's where we have to know when we go into this. Because it doesn't really make sense in my mind to hold these ICC meetings and do the negotiation and all that, and then figure something out, and then you bring it back to council and it gets defeated, and then you gotta go back again.
No, then it'll go to arbitrator,
No,
according to ICC.
right, then we wouldn't vote it down, right?
If we vote it down, then we have to pay the province to bring in arbitration, and we go through that process. So that's why it's important to have feedback as we're going, because the ICC bylaw says, if in the end, after we've negotiated everything and it comes forward, if one party says no, so we're done and we're bringing the final package, and we say
Yeah, but we're
no.
not bringing the final
No,
package.
yes, no, but I'm saying at the end, if we do that, then it goes to arbitration. So it's, that's where it's really important to have open conversation as a council to make sure we don't end up there.
So then with this,
if we voted down on the capital cost, it doesn't go to arbitration after that.
Just to be
The
clear,
final one is the
Yeah,
arbitration,
Unless
so
we can't
then,
come to an agreement on how to move.
well, that's why I'm saying. That's why, like Mary Ann said, if we have this all in front of us before this meeting, so you know what the feeling of council is, when you're going there, you're prepared to say, look, our council feels this.
But it wasn't quite done yet. And it's not, like, we don't have much to yet, so I don't. It'd be a waste, I think, to talk where we're at this right now, but yeah, I agree eventually.
But that information should have been here, is what I'm saying, at this
I don't think
update.
it's ready. It's not, we don't, like, there were zeros in a lot of the columns, it wasn't there. Mary Ann?
Is that ahead of you or?
it's okay.
Okay, thank you. And so just even Dawn, you'd said the word feedback, and because I'm learning and I sit as an alternate, or I just try to observe the meetings. And this is the study, TSI, it's been going on for a number of years. Has there been any previous to this, any public engagement that the community members have said, this is what we need, or this is what we've identified? We're making decisions in this room, but how would it impact everything moving forward?
Dawn?
I feel like that should have been done long before the TSI study that we spent a lot of money on, or during that. Because at this point, we've already committed to this process. Right, so we're now engaged, so, and we've designated people to that ICC committee to make decisions on behalf of council. We're communicating to make sure that in the end, 3 councillors don't say, well, we didn't agree to this, right? So to keep everyone in the loop. But you guys have already made the decision to move forward. So, I mean, you could go back. I mean, you could always do public engagement on it. Then do you stop the process and then do they challenge you and then bring in the province for arbitration? I don't know. Or is it too late to say, you know, we spent the money on the TSI study? You can still potentially walk away from it, but we need to find out legally what the ramifications would be. Or if it would just go to the province for arbitration at this point, is it too far in? I'd have to double check. We did spend hundreds of thousands on the TSI report, right?
Problems.
Grant?
Grant, yes, grant fund.
Mel?
Yeah, I was just. Yeah, I was just gonna clarify that. Yes, there's arbitration, but not at this level,
No.
like, we can still, just because they say this is what, you know, what they're proposing, we can still negotiate, and that's, it doesn't go at this level of arbitration.
It's at the end, if we can't agree, once we're done all the steps and the agreement's there, that's the point, we do an arbitration. If we then said, no, we changed our mind, we don't move forward, or we don't agree with this, and we can't get on the same page.
Everyone gather's up first.
Oh, sorry, Evelyn.
That's okay. I just want, just for clarification, you talking about like the public, like Joe, like our citizens, our residents to have their, because that was part of, just for clarification, TSI, that actually is how it started out, was all the different interviews with CAOs, the chiefs, the firefighters themselves. There was that public engagement piece, but you want it to be out larger than that, like non-fire related people?
Correct.
And when they did contact the firefighters, it was a stacked questions that they answered. It wasn't a one-on-one thing. There was 10 questions, for example, or however many there were, and you answered yes, no type of thing. So you know how that works.
Okay, so you don't like the way that the.
Well, no, I'm just saying that the county, when we first saw the TSI study, it was for the county of Smoky Lake, but all 4 municipalities were in on it. So that tells you right from the beginning where the TSI went.
Okay,
So my question is.
last question?
So is this population dwelling and assessment, is that a done deal yet?
For, like, to move forward, yeah, that's where it's at, but it doesn't mean it's like final. But yes, we've agreed to move forward with that. Dawn?
ICC is a little different because again, you choose your people to be on the committee and then they have the authority to make the decisions. But ultimately, that final report comes back to you. But that's why we're trying to keep you engaged along the way. This one went a little bit of a different direction with the information received at that meeting. But it's been, the motion's there at that committee level. So like, that's what,
Me.
no, Lydia, sorry, Lydia, so I was saying, so that's what Lydia's trying to do, is make sure that as we're moving forward with each step, that we get motions made at the committee level so that we know the service levels, we know now this part, we know next will be the capital, so that all the pieces, you know, the bylaw, the advisory committee, like all those pieces get step by step implemented, so that the final one is now we put it all together and we all agree. So instead of bringing forward one at the end and then there's 10 things that we didn't agree on, that's kind of the point of doing it along the way, is every little bit is approved at that committee level. And the idea is that we're communicating, the committee members are communicating back to our council, just so that we aren't blindsiding the rest of the council.
No,
Yeah, and that's the reason why I made this motion last time, right? Because I did sit on the last ICC meeting. But on Zoom, it's a little harder to hear like the whole conversation and stuff. And so I was a little taken back. Because we had talked about it one way and then it ended up making a different motion at the ICC meeting. And I would hate for it to not be discussed. And then when the thing comes back, everybody go, whoa, 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 you know, and we're back to the drawing board, like no one waste anybody's time. So the asset one is gonna be a big one, and it'll be, I think, a lot of communication between the ICC coming back to council to make sure that we're all on the same page, right? So that's the only reason I was curious on it.
Terry?
The thing that we're getting into is we're agreeing to pay part of the regional budget that doesn't affect the town. Example, the county or Wissetna or Vilna does not have the water capacity to do rural fires. So they're gonna be getting tankers and they're gonna be replacing pumper trucks with slash pumper tankers. And we're gonna have to be paying for that. That doesn't have anything to do with the town. So when we go into a funding formula for this regional fire, we have to take that into account, that once it becomes regional, I guess, what's the term? Where we sit on that, like say, for example, Municorp, when you go to sit on that, you're looking after the interests of Municorp, you're not actually looking after your municipality, right? So this is gonna be tough because a lot of that stuff is gonna be regional, but it doesn't have basically anything to do with the town. It's supporting the rest of the region on the taxpayers' dime. So that's the tough part about this regional thing, to switch from one to the other. Where before, when we went into joint purchase with them, okay, we bought a pumper truck, we went 60-40, didn't really matter if it was 60-40 used because you got use of the other stuff. Where now, once we go regional, we're gonna be paying for everything for the whole region. That's why that formula is so crucial. So
Yeah, we have to accept the verbal update by Councilor Cobbs and their attorney.
I'll make a motion that Town of Smoky Lake accept, Town of Smoky Lake accept the verbal update by Councillor Cobbs and Mayor Chernushin regarding the Intermunicipal Collaboration Committee Regional Fire Services motion to proceed with TSI's recommendation to split costs based on population, 20% dwellings, 20%. And equalized assessments, express as information. Okay, go ahead and call that question.
Okay, all in favor? No opposed or carried?
And
No.
And just regarding the motion from, like, the background motion from March, I'd still like to have that part of it where we or this council, like brings back to this council a discussion on the assets.
So following the meeting, with the county, bring back information, make sure no decisions are made at that point, basically bring it back, so there's feedback.
Well, or yeah, just feedback of what happened and what they're leading towards, and just so that, yeah, like I said, it can move along smoother and it's not confusing for. It's not frustrating for the people that sit on ICC, that you guys go to these meetings and you put in the work and the time. And then council, goes, nah,
Okay. We'll, make sure it's brought back somehow.
I know.
And I don't imagine it'll be, yeah, that's straightforward. Like there'll be room for a lot of discussion, but okay.
I'm sure.
7.4 bylaw 03-2024 corridor regulation bylaw motion for reconsideration. Done. Oh,
I just want to comment, so because we did talk about adding this to the last agenda, but really we need a motion of reconsideration to do that since the motion was made. And I did want to also mention that Marianne Janke reached out to me and asked to meet with me and discuss further. It was me, I think it's next week, so just as information for you to consider.
Mel?
Okay, so I'm a little the reason I asked for this one to be taken off the consent agenda is because I was confused with the reconsideration. So this is asking, I made the motion to send it back because of the wording in the fee schedule. So this motion is for to rescind
Well,
my motion
Councillor
on
Coates
this.
asked for it to be added to the last agenda, but then wanted to wait till Terry and Mel were here, correct? So we deferred it to this agenda. Then I also realized, well, to consider it or discuss it, we should really have a reconsideration because you already made the motion.
Oh.
So if you want to open this up for conversation, then you do the 2/3 vote, so four votes to reconsider and then open the conversation and decide if you want to do something different.
You just clarified that it's gonna be on Northeast Meeting Coordinator, right? It's
Well-
already been sent, so.
Yeah, the motion was sent to them immediately and then Marianne has asked to speak with me and maybe that clears it up. I'm not sure. So I wanted to make that, just bring forward that
Should we
information.
leave the motion as is and then see what Marianne has to say? Well,
Well, actually, my question, like my question now is pretty easy to answer, but I don't know if I'm allowed to talk about it without reconsidering the
That's right,
motion.
that's right.
So,
You have to break it back and put it 4 out of 5 to discuss it. Right, because you want to discuss what was in that thing.
So how do we bypass this? Just leave file print?
If you don't want to do anything,
Just
just
defer to the next meeting.
it's filed for information and then if something comes out of,
or we don't have to do anything.
you don't have to do anything. You just
Yeah.
move to the next agenda item. If you
actually it says take no action.
take no, yeah, so just take the action. Yeah.
Okay. So if everybody's okay with that, we'll move to 8.1. I have a really hard time with this word. Derelict, property tax. It's not how it looks. Evan?
So I'm the one that added it. And I just wanted, have you talked to Town of Athabasca? Because that's actually where the success was. And they're not that much larger than us. Like they are, well, twice the size, but just over 2,000. So because in your report, it actually says you talked to the assessor.
Well, we reached out to our assessor to say, from your perspective, what can we do? And he had ongoing conversations with City of Edmonton. So he sent me the links to several meetings as well as the ongoing, so then I could see the agendas and I could find the information. And then with that, because I had come across the Athabasca one, so I have the article and the bylaw and their success that they've had a couple of demolition permits come through to move forward. Speaking with the assessor, who's the one that will be part of the process, because I love the idea of the bylaw. The one thing is and I added some wording like derelict, dilapidated, and uninhabitable. Like there's really high standards to get to that level where we can issue this. Because we can't just say, well, that's an old house, we want to tear it down, right? So there was a lot to quantify it, and when we looked at that in town and in speaking with our assessor, it sounds like we might have two of them that would qualify, and one is coming to us probably in a tax sale in the near future. So he said, is it worth it? That was his advice. When he had looked into it for other municipalities in the past, the question came up, is it worth the work to go this route when most will come back to the municipality? So I was just trying to bring forward as much information. Athabasca has had success. I can follow up more, but I didn't want to do that unless I have direction from council, because if you guys don't want to go that route, then there's no point in me doing anything, right? I thought there might be something around non-residential, and City of Edmonton basically said no. That they didn't, with their research and touching base with legal, and again, I haven't done any of my own work, I just based it on theirs, was not to include residential, it was too convoluted. And then I put the information in there as to why they said, not recommended due to technical limitations on setting a higher tax rate. Well, that might not be that one. So anyways, I'm at this point, whereas if you want me to get more information, I move forward and get more information, if you want to bring something forward. We did recommend next tax year, because we're already into, April, and we've got to bring forward our, updated budget, because now that we have the actuals on the school requisitions and whatnot, and then the tax rate bylaw are due right away. So we're recommending, if we want to move forward with this, let's get some direction from council, but we're recommending for next year. So then we give our residents also that heads up of, by the way, your taxes could be, say, doubled, or Athabasca is going to quadruple.
Okay.
Give them a heads up, work on the policies, or work on the research, bring it back so that we're prepared. Like, so then we have the next, say, 6 months to get this ready to move forward, and in the next budget year, we include that in everything, and with the intention of moving forward. So just, yeah, I kind of gathered what I could for information. And then thought, get direction, and then we'll move from there, depending on what council wants to do. And I don't know, I might be missing some other municipalities. We're aware of two that we. And one we're getting. There's a really good chance. We talked about that at the last meeting, so that leaves one. So do we want to pursue this for future? Is it something we want to sit on? You want to do research and bring back and make a consideration then? Like, just looking for some direction before we do more work. No?
I think I think it would be good to do a little research and bring it back and think about it, if it would be an option for. Yeah, for us, and not, and maybe in the 2025 tax year, depending, like you said, if it's an issue or not, but yeah, I'd like a little more information on it, see what can be done.
It encourages demolition. There's some benefits there.
Yeah.
It's also because there's so many comments that are made about those buildings. So actually, I think it is worth pursuing, because it goes to show that we're trying to do something. So as much as I would love to be completely successful at the end of it, maybe that the success is not so much at the end, but public perception along the way, that at least we are also trying to do something about it as well too. Even because there's two properties, but we don't know, we can't bank on that second, you were saying, the one.
Yeah.
And it's not just those two as well, like there are others that are in.
And that's why I had the recommendation that we move forward with looking into more, but for the next tax year. So that gives us now until.
No, and I like that,
Yeah.
yeah, I like that suggestion, it's more, rather than coming out with the hammer, we're sliding in, we smack, okay. Okay, thank you.
So I make that motion then?
You can find the page. Okay, I got right into 69.
Sorry.
Somebody else can make it. It's on too far down on the page.
Or Ariane, she has it.
What page is it again?
69.
I move that the town of Smoky Lake bring back the options for dealing with derelict, okay, residential properties for the purposes of creating a tax subclass to be considered for the 2025 tax year.
All in favor? And then opposed, so carried. And we'll move to 11.1, Town Smoky Lake Railway Station celebration.
I just have a quick question.
Yep.
In regards to the consent agenda, the bylaws can go through without.
One reading. So
Okay,
because
so
we've
the
done
third-
first and second already, and we don't need unanimous consent, we can do third.
Yeah, good question.
Thanks. But if it was all 3 readings, no. Just, yeah, 1 reading.
I don't remember. Mel?
There's me.
Was it you? Oh, I need to leave, right?
Yeah.
Yeah, declare pecuniary interest.
To the end.
Yeah. Heritage Board.
Okay, like, didn't catch that one. Thank you.
Okay, so the only reason I wanted to talk about it is, we put a lot of, like, we've invested, lots of people have invested, not just the town. I think it's good to have a celebration. I just am surprised that we're getting asked to spend $1,000 on it. So, so the celebration isn't at Quincy Station, which was weird to me.
It's gonna move there. Yeah. So if I can go ahead if you want. So Noreen reached out to me and said, hey, we did all this work. We should have an event, who do you see running this? And I said, well, if you wanted the town to run it, we really should have been contacted last year because we didn't budget for anything. So you have to submit a request. Don't really have capacity for additional events, but we're willing to support you if you run something. Like in terms of public works or whatever, and then we're doing the plaque and we have a contribution for that and whatnot. So then she reached out asking about this event and the Heritage Board came up with a plan. And so she let us know that they were gonna start, the plan was to start at the curling club and then walk over. And so it's both locations. I think it's because there's no place inside of that way it's kind of the backup plan, I think, is the curling club in case it's raining. And then asked for the dollar amount. So I said I could bring it to council for consideration. But I did let her know, like, I need to know these things usually by August, September, so that we can include them in our budget moving forward, so we're prepared. So just for her to know from a board perspective, if you have anything for 25, get it to us by early fall at the latest.
And so I'd like to add to it, so with the generous donation from Mr. Ratzoy, we had tried to plan something before his untimely passing. And a lot of, as you identified, Dawn, there's a lot of work that goes into the planning of it. So if we were to host something at the CN station and say a target number of people to come, and there would be no seating, and then the options of the bathroom and even serving food or coffee might be a bit of a challenge. So having the formal program right at the arena part of the curling rink, and then just opening the doors if in the event there's rain or anything like that, and creating, so it's 2 events in one. It's an open house. So the first part is a formal program with the donations, and then it moves to the CN station for the unveiling of the plaques, which are part of the program for an open house. You can tour the station itself. There'll be children's activities and musical entertainment. So those people not wishing to participate in the open house and not see the CN station, they were at least acknowledged at the program, or they can participate in the program. Go ahead.
So basically asking for the town to fund it, but then it's gonna be volunteers that are organizing it from like the regional heritage boards.
Correct.
We said we'd support in kind, like in terms of, because it's our building, and said, what I can offer you is we could, if you need barricades or you need tables and chairs or something, that kind of thing we could do, but anything else needs to be a formal request to council.
So we're doing in-kind work as well. I guess what I'm
There'll
just
be minimal,
getting,
but there will be some.
I guess what I'm just getting at is, yeah, it just would be nice to know.
Well, again, it's in the
It's on May
defense of the Heritage Board, yeah. There was some planning involved, and what did it look like at the committee level if we were going to even have an event. But to mark again the donation, and the building, believe it or not, is a town-owned building. It celebrates its 105th year of this year, built in 1919. So we've got an excellent program planned, and I think it's
And don't get me wrong, people put a ton of money into a ton of donations, and I think that they should be, and we should be very thankful and appreciative for all those things. Yeah. I can support it. It just frustrates me. I'm not gonna lie. It does frustrate me because it goes to a board that gets funding to plan something that they want funding. And I totally get it. It just was, if you were gonna do it, like if the Heritage Board was planning this, trying to do it for Mr. Rat, so I'm sure there still would have been an ask from the town.
Well, the celebration and everything was always going to be the town, as I understood. So the Heritage Board did the composition of the work and the grants, so,
That's what I mean, it wasn't budgeted at the town level though, right? So it was just, but that's the only information I wanted. I'm comfortable and prepared to support the recommendation. And I will make that motion even.
okay, if there's no more discussion, go ahead.
I make a motion that the town of Smoky Lake approve a donation for $1,050 to the Smoky Lake Regional Heritage Board to support the town of Smoky Lake CN celebration to be held on May 25th, 2024, to be funded from the 2024 operating budget entitled grants to individuals or organizations in reference to the letter from Noreen Easterbrook, Chair of the Smoky Lake Heritage Board, donated, dated April 16th, 2024.
All in favor? Motion carried.
Are you leaving? So you're not staying for the close?
Do you,
I'm just making notes that everyone left.
I'll give the chair back to you. Do you ask for to be excused or anything? Not sure. No?
I'll make a motion to go into closed session for Chief Administrator Officer's appraisal follow-up section, section 19, confidential evaluations.
All in favor? None opposed, so carried. All right, can I get a motion to come out of closed session? Terry,
I'll move to come out of closed session.
all in favor? None opposed, so carried. And Mel?
I'll make a motion to accept for information the discussion on the CEO's evaluation and finalization of the evaluation.
All in favor? None opposed, so carried. And meeting is adjourned at 3:48.
And
we'll
see you
see you all
guys in
in
an hour.